The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, good afternoon. We've had a request to take a look at Tesla, the motor company of Elon Musk, and I posted the chart into the Tiger TV, and as you can see, it's made a 1.27 expansion as of yesterday's high, and then we've gapped down a little bit today. We got earnings, I guess, in the stock. I don't know anything about it. However, it did remind me of something. The new auto company like this, back when I was in the days of Drexel, during 76 through 82, we had a new car come out called the DeLorean. It was by John DeLorean, who was the brains behind the Pontiac Firebird, the Pontiac Bonneville, and the Pontiac GTO. And he started his own company, I believe, somewhere around that time. I think it was 1975. Unfortunately, he ran into some really bad times. Mainly it was a recession from 1975 to 1982, and the company went bankrupt. We bottomed in the stock market on August the 9th of 1982, which was a big move. But DeLorean was his wife, Christine Farrar, was a customer at Drexel, not my customer, but she belonged to another broker. And she would come into the office, and she was with her little kids, and she was just a really pleasant lady, and she, as of course, was a model, and very beautiful girl, but had beautiful little kids, and they were really a beautiful family, and but it reminded me of that. And the stock had gone way up, and then of course went into bankruptcy. I'm not saying that's going to happen with Tesla. But the Tesla is a fine car. My children bought me one just about 4.5 weeks ago, and it's really nice to look at and be around and everything. The only difference between that one and the one I have is mine's 1/64th the size of the model. So I've got a little model Tesla here, so it's still a pretty cool looking car. So you can't say my kids don't take good care of me, but they do. So who knows? Anyway, we'll see what happens. They have earnings coming out today. I don't know what that means or anything, and we'll see with that, and we'll say that. His wife stayed with him. Someone asked a question if Christine stayed with him. No, they did not. They split up sometime about in the early 90s, as I recall. He died he was 80 years old when he died, and so he must have died about 10 years ago. And he was 80 when he died, and she is still living in New York, I believe, what someone told me, but I don't really know. I don't follow that stuff very much. Let's get to the real world here. We've got a really interesting market going here. We made a new high in the S&P cash today. We've actually gone above the high that we made on December the 31st. And we blasted through that high. I mean, you wouldn't believe how we blasted through that high today, folks. We made a high by exactly 1 penny in the S&P 500 today, which is really quite amazing to me. We still have the possibility that this market could get up to the 188 level, which would complete a 5-point reverse wave pattern. But we did make a new high from December from January 1st, and we made it by 1 penny. The high today was 184.95, and the high on the last high was 184.94. So I was shocked when I saw that, and it really brings a lot of amazement to me when I see something like that. But you'd think that once it went through by 1 penny, it would go at least 10 cents or something like that. But 1/10, I mean, that doesn't make any sense to me, but that's neither here nor there. I'm going to start out with what I think the most questions that I have several questions coming up today, but one of the most asked question, of course, is the Bradley model, and I wanted to bring that up. If you'll give me a second here, it'll only take me, because we are at the proverbial moment of truth here in the Bradley model. We are on the day. This is it. This is, if it goes much below here, this is this is where we should stop. Let me get this thing running here. You can't get an Italian to walk and chew gum at the same time, so bear with me. There we go. That should come in there. And you can see that we're completing a head and shoulders pattern that is very symmetrical. The Dow is trading at the 61% retracement of the high from January 30th, and December 30th. And the the S&P cash has made a new high. We're going to go through each one of these markets one at a time because you can see the divergence of what we have going, whether that's going to mean anything or not. But it looks very similar to what happened in March of 2000 March of 2000 when we made a new high in the Nasdaq, and we did not make a new high in the rest of the market at that time. If this is correct, we should be in for a pretty strong correction into April Fool's Day, which would be most fitting for this market, I think. But we'll have to wait and see what happens at this particular time where we are right now. We have the Dow was up on the day. I believe we've sold off a little bit here recently, so we're a little bit down on the day here. So we'll have to wait till the close and see what happens. But the Dow has been up. We've been up quite a few days, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. And that's usually all it gets in a run, but whether it's going to be different this time, we'll have to wait and see. The other market that's very interesting today is the fact that the VIX index, with the market being higher today and making a new high in the the cash S&P index, the SPY, the VIX index should have been making a new low, which in fact is actually up on the day. And we did hold the 786 from 2 days ago. So that's a positive side from the bearish side, because there is no fear in this market. There are people, they do not have any idea of margin at, or if that stuff means anything. And believe me, folks, maybe it doesn't. I'm not sure. We'll have to wait and see. But we are certainly in an era that's different than we've had before. We're getting in when we have rumors that just the slightest thing of Apple meeting with Tim Cook, the CEO of Apple, meeting with Elon Musk, made both of the stocks move, 3% yesterday, and that's a pretty substantial move in these stocks. And I've had a request to do the stock of Apple. And if you'll give me 1 second here, we'll put it up. And the volume on this rally that we've had in the stock market has been nothing short of pathetic. It's been far, far less than any volume rally that we've had in any particular rally since, way back 5 or 6 months ago. So we'll whether that means anything, we'll wait and see again. Okay, this is, someone asked a question about the 19th being a key astro date. Yes, it is. If you can see from the Bradley model that I put in, it is definitely a key astro date, and it is important to remember these dates because they come in pretty good. We had one on the 12th. That was when we had the big up day. We have the one today, which is the 19th, and we've got another one a week from today, I believe on the 25th. I think it comes in on a Wednesday, as I recall, and that's the really big one. That's a really big day. There's going to be a lot of volatility on that day. That's pretty much we're starting to see increased volatility in a lot of different things, so that should be one that is pretty good. But getting back to Apple, as you can see, we've been in a downtrend since December. We've had, this is our fourth lower high that we hit yesterday that came in exactly at the 61% retracement of the high from, late late November. That the market stopped right at the exact 61% retracement and is now sold off about $12 a share, $9 a share in just a very short period of time. And with the big move down today with the wider range, my guess is that we're probably going to go a little bit lower here in Apple, mainly because it's been up 10 days in a row, so it's due for a 3 to 5 day correction. That's just normal stuff. There's nothing. You don't have to be a rocket scientist to figure out that particular scenario, because these markets don't go straight up, even though they sometimes think that they do. They don't always do. Now, the next request that I had was for one that I never follow, but I posted into the room before, and that is the biotech, the IBB ETF for the biotech firms. And as you can see, that also has made a new high, and it's almost made the 1.618 expansion. It's missed it by a couple of dollars here, But here again, we've been in one of these, 12-day up moves since early February when we had the full moon that came in. So we'll see whether these things actually have any ramifications on these patterns. But right now, this is what it looks like. What's like to me. It looks like the market is rolling over. In different parts. As one part rolls over, the other part doesn't. Like one day it's the NASDAQ, the next day it's the S&P. So this is what happened in 2000. And all I can tell you is that margin debt, that's like the grim reaper of stocks. I mean, I've been there and done that. So you can, like they say, you can lie to me and you can cheat me and you can do whatever you want, but you're not going to be able to hide from me. So if these stocks make new highs in the New York Stock Exchange Index, then I'm going to have to say, well, it's time for the old cowboy to take that last roundup. That's what I would be doing. So we'll see what happens here. Where we are in this NYSE index is exactly on a psychological and technical basis and cycle basis. We're exactly where we were when we were at 154 in Treasury bonds 18 months ago. As you recall, Tom O'Brien and I had a little bet on that. Tom thought they were going to go to 160, and I didn't think they would ever make that, and they came pretty close to making it. But the bet was that I had to go out on his boat if I lost the bet. Thank God I didn't have to. Not yet. Maybe they'll get to 160, but by then I won't be here anyway, so it won't make any difference. So we'll have to not worry about that. That's one thing you should never do, folks, is don't bet on your positions with other people like you're going to bet on somebody that Apple's going to hit a certain price. I don't care if it's even a nickel. It's not worth the psychological damage that's necessary to get over that stuff. That's just really something that you don't really want to have any problem with at all. That's my opinion. I'm going to put up the NASDAQ now because this is the one that is pretty much spot on as far as I can see. We've completed the 5-wave reverse point wave right at the 1.27 yesterday. We're 1 point off of the exact high in the NASDAQ 100. And so far, we didn't make a higher high today like we did in the S&P. The S&P futures, by the way, did not make a new high. They missed it by more than 6 points. Whether that means anything or not, it's still way too early to tell. But for timing purposes, this is it. We're the Bradley model. When it's right, it's really right. And when it's wrong, it's really wrong. And right now, it said the bottom came in on the 3rd. The high should be today. If it gets, if this market's higher tomorrow, the Bradley model's not working. So that's what we got to think about. So right now, we've got the Dow Jones up about 33, and it's down 23 now. Wow, it moved a lot just since I looked.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Right now we have an outside day working in the SP futures. As you can see, we have completed the we made a higher high than yesterday, and yet we made a lower low than yesterday, which makes this an outside day. We've also had 3 lower highs. We have not taken out the high from December 31st. We did that in the S&P cash, but as you can see, we have not done that in the futures as yet. So this is something that we want to remember, that if this is a really bad day in the market, like the market reverses from being up 100 to be down a couple hundred, you can just about put a big circle around the high today, and if we get above that, all bets are off. But that's the main thing to keep in mind, that this is a key astro date. And what I mean by that, this is like one of these P-index dates that Frank Tauscher called. It was a Pesavento index date, and we call it the P-index date because there's so much happening with the number of aspects occurring, or the least number of aspects. The way I'm calculating that now is a little differently than I've done it before, because of more information that we have that'll be coming out relatively soon to show folks that this stuff really does have some tremendous timing possibilities. It's not like foolproof or anything like that, but it certainly is better than just throwing a stone at these things. The Bradley model is the first indication that this stuff really does have some meaning to it, but it's by far from perfect. You have to remember that. There's really there's no perfection anywhere. Anybody that tries to tell you that, you shouldn't walk away from that person. You should run away from that person. We've had a request to take a look at the Russell IWM, the Russell Small Cap, and as you can see, we went up to the 786 on Tuesday. We hit it also on Wednesday. We made a slightly higher high today, and now we've turned down on the day. And if we go below the low we made today, which was not too far away from where we are now, that would be an outside day also, which would be quite negative from a technical perspective, especially coming off that 786. And the Russell also has the earmarks of a head and shoulders pattern on the daily pattern. Head and shoulders pattern is one of the more powerful and most often used technical indicators of patterns, and Dr. Andrew Lowe from MIT featured that in his book on pattern recognition, the non-random walk down Wall Street. That was one of the main patterns that they had looked at, along with double tops, double bottoms, triple tops, and pennants and flags. But head and shoulders is one that people have always looked at. What's interesting about a head and shoulders pattern is if you have good symmetry, in other words, if the right shoulder and the left shoulder are at the same price, that's a very positive sign that it is working well. And if the right shoulder is lower than the left shoulder, then you're looking at something that really makes it look like it is going to be a lot different. We've also had a request to take a look at the Dow Jones Transportations, and I will certainly do that right now, and then we'll be ready to take our next break. But if you want to see a head and shoulders pattern that's really symmetrical, I thank you whoever asked this one, because this one is just spot on as far as a perfect head and shoulders pattern. You'll be able to see in fact, I featured this in the newsletter this week. You'll see that the time between the shoulders was exactly the same, and there's a perfect example of you're seeing how the right shoulder is lower than the left shoulder, and that's the real key here. See, the left shoulder only made a 50% retracement. Remember, we were making a new high in the S&P cash when we were making a 50% in the transports, and now the transports are taking out the lows from last Friday already. So that's telling you that is also something that is relatively weak. So this is a perfect head and shoulders pattern. If you ever wanted to see one, this one in the Dow Jones Transportation is as good as you're going to see it, because it is spot on to what it's supposed to look like. There's no question about it. And I thank the gentleman that brought it to my attention in the trading room. And believe me, folks, if you want a good place to hang out, if you're lonely when you're trading, the Tiger Den is as good a place as any. There's some really smart folks in there, and some really great people that come on. Steve Rhodes, Tom O'Brien, Daryl, David. I mean, they're all really good. And of course, the champion of them all, Basil Chapman. So Basil will keep you honest in these market, folks. He's as good as it gets. So that's what we're looking at now in the Dow Jones Transportation. We've turned down. If it starts to increase volatility to the downside here, that would also tell us that we're getting ready to look at something even worse. We've got the Dow down 38 points, the S&P's down about 20, and gold's down about 5.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I've had a request to take a look at the banking index, and we're also looking at the banking index as having a head and shoulders pattern forming also, and I'll put that in there in the Tiger Den so you'll be able to take a look at it. Here you have the right shoulder is just a tiny bit higher than the left shoulder, but it's the 61% retracement on the banking index missed it by about 10 cents on last Thursday, and of course we haven't made a high from last Thursday, but that's the way it looks from a charting perspective. This is the real key rally, folks, that we're looking back here, because we've made new highs in a few of these indexes and we have not made new highs in the others. The NASDAQ has made a new high, the S&P cash has made a new high. We've made 3 lower highs in the futures so far, but it's still early in the day. We've got 2.5 hours to go. We could very easily go up and make a move and make close above new highs, and then everything would change. We got a call from our friend John in Philadelphia. John, how are you?
I'm well, Larry. How about yourself, sir?
Good. How's the snow? You finally melting out?
Well, week of February 3rd, ice storms. Week of February 10th, 18 inches of snow. Yeah, we'll get by. This kind of feels like 2010 when we had 2 back-to-back 2-foot snowfalls. So, but we survived that. We'll survive this.
We always do, don't we?
We do indeed. Larry, I wanted to ask you about both gold and silver. With the rallies having accelerated higher last week, having bottomed back on that December 31st, Two questions for you. One, do you see this rally on the daily charts extending higher? And two, for supplemental buys, do you see any good setups or entries in gold?
John, the answer to your first question is after we made the low back on December the 31st, which was almost an exact 61% retracement, you had talked about when you were going long silver at that point. And we have now come up to the 786 retracement of the high that we made in October, plus it's the 61% retracement of the high we made way back in August. So this is basically, gold is still in a downtrend. We've just had a very, very strong rally, which we've been expecting. And, we are out of gold. We thought if it got to that 1330 per ounce, that would be a good spot to take advantage of it, to get out of the positions that we were looking at. And now we're looking for a pullback, and I'm looking for, the last time we had a pullback in this gold market, it came down about $50. So if we come down about $50, down to about that 1280 level, in the next 4 or 5 days, I don't want to get there in 1 or 2 days because that's telling me it's a little too fast, but if it takes 4 or 5 days to get down to that 1280 level, I'll certainly look at it from the long side.
Larry, thanks for mentioning that. You've mentioned this many times in the past, wide-ranging bars. Is it a hard and fast trader's rule that you've come to use, that namely when you've got a wide-ranging bar either to the upside or going down, that you never step in front of that, give it a couple of days sort of thing?
Now, John, a hard, fast rule is the understatement of the year. It's honest to God, in order to show you how important the long-ranging bar is, instead of doing a trade with a long-ranging bar, send your check directly into Chicago Mercantile Exchange at Chicago Board of Trade, because then you can bypass the commission and the heartache, because 90% of those just don't work. Those long-ranging bars, I tell you, and it's the hardest thing to get across to people. The only way they can learn it is by hard knocks, and that's really the only thing you can do.
You and I have both personally firsthand experienced many of those, so we've learned, I presume.
Well, we're always learning, John. That's therein lies the rub, as they say. So,
down 50 then, Larry. Thanks so much. I appreciate it.
Oh, no problem, and I always like talking to you. Thanks for calling in.
Great.
You bet. Since we're on the subject of gold and silver, we wanted to cover it here because it's important to all you folks at TFNN. We have now come to a 61% retracement on the gold-silver index that we've been looking at. We've had a really strong buy in that about a couple months ago when we were down around the 80 level, and now we've rallied up about 22%, and we've made an ABCD pattern. It's a perfect ABCD pattern going back from December 31st to where we are now. It's just absolutely spot on, so you certainly don't want to be long gold and silver from here. If it pops out and gets really strong here, if we get gold above $13.50 an ounce, then $13.50 per ounce, then I would think that, yes, the market could go higher. But right now it's ripe for a really good correction, and we want to be ready to buy that and re-enter the market if we get to that point. I've had a request to take a look at our favorite gold stock, American Barrick, and that stock has been pretty good to us. And as you can see here, we have gone up and made several new highs in American Barrick. We have taken out the highs from last October, but what we're looking at now is a potential correction just based on what we're seeing in the overall gold to silver index and gold and silver themselves. So we want to be looking to buy American Barrick. If it can move down a couple of dollars from this level, it would certainly look interesting from the long side. There's a possibility here, folks, and it's a little remote to say it too soon right now, but there's a possibility that we're seeing a major turn in commodities here, especially if gold gets much higher and crude oil gets much higher. We could be looking, because these are pretty big commodities, especially crude. Everybody uses crude, but that would really be a big move. And we're at a major, we've completed the ABCD patterns now in the crude oil also, so we should be able to. I should bring that up. That's that important because everybody uses crude. It's like your own what do you call that, inflation index, because there's no way you can get around not using crude oil, that's for sure. But as you can see from this chart, we have made another ABCD pattern up here. We've taken out the highs. We're almost at the 61 retracement on crude. We came off that bottom down at 90, and we've rallied well over 12% from that level. So that tells us that we should be getting ready to, just give me a second to take this up here. We'll take a look at crude oil here, and then I've had a request for silver. So you see crude is going to have some pretty strong resistance here between the 103 level and the 104, because there's a lot of stuff that comes in at that level. And and we've been very strong, which is what we were expecting. But now is the time that buying strength in these markets has not been the legitimate thing to do, because every time you buy strength, you end up looking at something in a deep dark hole, and you don't want to look at. Now silver has held up pretty well. We've made a 786 retracement in the silver, and it also is looking good. Now these markets have not backed off very much. I mean, that's a good sign if you're bullish and you want to hang on. But frankly, folks, if you take a look at that silver market, since February 3rd, it hasn't had a down day. Today's the first down day, and we're not even closed yet. So we've closed higher every day since the end of January, and that's been unusual itself to have 3 weeks straight up. So if we get any higher at all, we could easily move up to the $24, $25 per ounce level. Remember, silver stopped almost exactly at 786 on the weekly basis. So that is just like gold was hitting the 61% retracement, silver made the 786. So there's a chance that we could be looking at commodity prices turning turning higher for the first time in quite a while. Now, if you remember, wheat has been the weakest thing, and we've had a 40-cent rally in wheat, and it's up again today quite strong. So there again is telling us that some of these commodities might be turning the corner. And if we have that, then you're looking at some inflation numbers coming on top of higher interest rates, and that's usually not a good thing to look at. Since we were talking about interest rates, I wanted to bring up the chart of Treasury bonds here, because we had a very interesting pattern in Treasury bonds today, where we completed a very nice little ABCD pattern on a 30-minute chart that looks very, very interesting. And I'll put this into the I think it's almost down a full point from that point where we looked at it. So give me 1 second here. This is the 30-minute chart going back since the beginning of February, and you'll be able to see that we have made that 61% retracement perfectly today at 133.29, and we've already backed off about $500. And if this pattern is correct, we should get down to the 130 level in the next 4 or 5 trading days, if that is going to happen. All right, we'll take a look here at what the market's doing right now to get a little update on everybody that's listening to TFNN. Let's see, we got the Dow down. The Dow's down 32, the S&P's down 4, the Nasdaq's down about 13. So it's still early. The S&P did not even take it out the lows of the early morning as of yet. We did that in the Nasdaq, but we did not do it in the S&P ES contract. And believe me, it's very easy for that ES contract to go up and take out the high without any trouble. That's no question about that. That's a really simple thing to do. We got a call from Brent in California. Are you there, Brent?
Yes, I am, Larry. How are you doing today?
I'm doing good. How are you?
Very well, thank you. I was hoping to get your analysis on the UNG, please.
Okay, you betcha. That's the natural gas ETF, correct?
Exactly.
This is the wildest. I mean, I'm watching natural gas future now, because it's just it's really an amazing thing to follow, because it is the wildest thing that we have trading in futures. It's worse. Well, not worse. It's better than crude oil or gold or S&P or bonds or anything. In a matter of a week or so, we had a equivalent of a 250-point move in the S&P, up and down. in the natural gas. I'll bring that up, but let me first show you that the natural gas, I believe, is forming a three-drive. This ETF anyway is going to be forming a three-drive pattern here in the next 4 or 5 days. If you look at it, you'll see that the third drive is very close. We've gapped up, so that it looks like we do want to go quite a bit higher. But we've moved 30%. More than we've moved to 40% since November. So it's really a wild one. Do you look at the natural gas futures at all?
Yes, I do. Yeah, I'm hoping to at some point. Not yet, but go buy puts on the UNG. I know it's probably not quite the time, but I'm wondering if I might do a 3-gap play or do something exhaustion gap tomorrow or in the near future.
Well, I would certainly wait on that. Now, what I'll do here is I'll show you what I'm looking at. I'm going to do I think I have the hourly. Yeah, here's the hourly for the natural gas futures, and this shows the swings that we've had in the past month. We've had several swings here in natural gas that are equivalent to 250-point moves in the S&P. That's the equivalent of 1,250 Dow points. So you did mention something when you talked about the word hope. That's a pretty tough thing to handle.
That's not a good word to use in trading.
No, not a good. It's good for prayers and things like that, but for trading, it hardly ever works out. And believe me, I have a lot of past experience doing that. But looking at this natural gas contract itself, I agree that sometime between the $6 and the $6.30 level, but that's a difference of $3,500. You've got to be a little bit more precise when you want to enter it. If you don't mind, I'll show you what I would be looking at as a trader. I'm looking at an hourly chart. Then the next thing I would do is I would go down to the to a 5-minute chart and try to find an entry point there. Like just recently here, we came down and then we rated up to an exact 786 retracement there, and I would be looking at that as a potential entry. But remember, now you're only risking $400 or $500 opposed to $3,500. But the problem is, Brent, you might have to try this 4 or 5 times before you get it right. That's the bottom line. So right now, I'd be waiting to see it at least get to 618 per cubic foot or 624, and that would complete the third drive on that UNG ETF. Do they have a reverse one or is that the short one? That is the short one, isn't it?
There is some leverage though. No, it's actually, I would just be doing the puts on it. It actually is kind of a 1-to-1 of natural gas.
You're kidding me? They have puts on a leveraged ETF.
Oh, they have the DGAZ.
Oh my God.
There's all kinds of stuff out there. I'm just doing the UNG. I'm not that crazy.
Boy, you talk about maximum leveraging. I mean, this is I can understand why Warren Buffett says some of these derivatives are weapons of mass destruction. I can certainly understand that. Wow, that's a lot of leverage. I would never want to attempt to do anything like that. Stay away from. You just do the UNG. Don't Just be careful, my friend. Okay.
Thank you very much, Larry. That helps very much.
Thank you for calling in, my friend. You bet.
All right.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, folks, we've got just about 3 hours, 3 hours to go in the market. And is that right? Yeah, we have 3 hours to go in the market. And we are down about 37 in the Dow, down a little bit in the NASDAQ, down a little bit in the S&P. But the key thing to remember here, folks, is the Bradley model has a very key date today. This is also key Astro date, the 19th. We talked about that several weeks ago. If this is correct, the market should be topping here. We're looking at the potential here in the Dow Jones, making that 61% retracement. And we could be down for into April Fool's Day, which would be only fitting in this type of market if it does. Remember, when the Bradley market fails, then it really does fail. So if we close strong tomorrow, above 16,200 in the Dow Jones, about 100 points from where it is now, I would think that the Bradley model is probably not working, and you just won't be able to use it again until April the 1st. But if it's correct, then you should be coming down into this level here that we're looking at, and then we would be looking to be a buyer into April 1st for a rally into the 1st of May, which is the really big. There's another really big key date there on May 1st, and then from that point, it's basically a big straight down move into the summer months. Into September, if that's the way it's going to unfold. But remember, it has to start keep working. I mean, it's been working really good since December 31st. It came down and saw the low on February the 2nd. We've had the rally up in here, and now we're looking to see if it's going to have this little pullback, to the downside. Whether it's going to do that or not, remains to be seen. But with a couple hours to go, if we have a big reversal today where the Dow is down more than a couple hundred points, and that's going to mean a lot to a lot of people, because you made a higher high in the cash S&P by 1 penny. That, to me, I don't think I've ever seen that. I mean, why didn't it at least go 2 pennies? But we only made a high by 1 penny in the cash S&P. The futures, as we mentioned, have made 3 lower highs since December, and futures is where the funny money is, because that's all leveraged and margined. So there's some questions here, and also the fact that with the Nasdaq, we've completed that 5-point reverse wave up there at the 3686 level, and we backed off more than 30 points on that just today. And of course it's still early, but anything can happen. But a really strong close today, maybe because the Fed is out there today at 2 o'clock with their meetings, but whether that has any effect on the market, no one knows that, at least of all me. So that's something that we've got to watch. But it's really important to remind yourself that if this market does get really strong, closing above the 16,200 level, then I would have to think that the Bradley model is not working the way that it should be, and we should look at something else and take a vacation from shorting stocks. But selling some of these rallies has been okay, and some of the stocks that we've been watching, like Apple and Tesla was another one we were looking at from the short side yesterday. And whether Google is going to make a new high or not is also important, because it's also completing a 5-wave level up there at that 1207 yesterday that it hit. And believe me, at 1207, that's not a cheap stock. It's a long way from when it came out as an original issue that day. I think it opened at around 70 back in 2004, but it's had a little bit of a run, I guess. So that's the way it's supposed to be. All right, we've got the last few minutes of the show coming in. Daryl's coming up next, and we've got the Dow Jones is still down on the day, but coming back a little bit.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion. You're watching Tiger TV.